Welcome back to Your Average Investor, everybody. We've got some exciting news today. The Gamestop and AMC positions that I've been holding, not in the challenge account, but in my other accounts, I completely unhedged. So remember, I bought 300 shares of GameStop a couple days ago and immediately turned around and sold covered calls on them. Those covered calls sold for about $715 a pop in premium, and I just bought them back today for about $100 a pop. So net gain on them was about what is that? Why am I struggling on easy math? $600 per contract, which reduced my cost basis quite significantly. The reason that I unhedged them is the momentum moving into this weekend is looking quite bullish, and I actually want to wait for a little bit of a weekend pop potential if I'm just trying to mind game my way through how Roaring Kitty has been doing things. The announcement back here was on a Sunday night. The announcement here was also on a Sunday night, and so I'm thinking that there may be a good chance that this coming weekend he throws something out again and it causes another pop, and at that point I'll look to potentially re-hedge by selling more covered calls. That being said, there are a few days, and those calls that I sold would have expired before the weekend anyway. They would have expired Friday, but again, I collected 90% of the value of those premium just in 2 days, and so waiting 2 more days for that next 90%, not worth it in my opinion. If this pops back up to like $35 a share by Friday, I want to be ready where I can re-enter positions as needed to continue to reduce my risk on those shares. So looking really bullish here. I did the same thing. I've got 200 shares of AMC in my Robinhood account, and I've been continuing to sell covered calls on them and reduced my cost basis quite significantly by doing so. And right now they are both completely unhedged. Both lots of 100 are completely unhedged. Now, that brings me to the challenge account. Remember, I sold these cash secured puts on AMC in the challenge account. These expire next week. Not this week, but next week. I sold these for put fours. In my opinion, again, there's no reason to hang on to these when there could be better plays in the market. We're talking, right, we've got 10 days till expiration. Well, maybe 9 days till expiration and $10 left. So the other way to look at this is based on the money that's being held here, right? 400. I'm getting $10 for that 400 in collateral, 2.5%. So not bad for a week. I'd still be happy to collect 2.5% a week. If I did that every week, that's 10% a month. That's phenomenal. But I do want to look around and see if there's a better opportunity on the market right now. So that's exactly what we're going to do. We're going to take a look at the challenge account list that I have here, and we're just going to see if anything looks particularly exciting. We've got Big Lots, of course, that reports earnings tomorrow. I believe tomorrow morning is when they report earnings, so there might be a lot of juice here. That doesn't look bad, actually. The thing that I don't like about this is it's 16 days out, because these just have monthlies. There's no weeklies. So I don't know, and the volume on it is not super high, which means it's not gonna, like, the spread there is like overcoming that $5 spread is gonna be pretty significant. So I'll come back to Big Lots. Let's take a look at, oh my gosh, DDD. Did they finally report earnings? What happened there? They've been on my watch list for a while. Let's see. They received a multi-year purchase agreement with an estimated value of $250 million. Wow. That's incredible. Okay. Well, that's a nice pop from 3.5 to 4. I know they're supposed to be reporting earnings sometime. I just don't know when it is. So that is really interesting. Man, I've been watching this one for an entry, and maybe I missed my entry there on that pop. If that sells off again, maybe I take a little bite. Or let's take a look at the contracts here. Yeah, the premium's still not great on those contracts. All right, let's move on to. We just looked at AMC, Neo. Not a big fan of Neo or Chinese ADRs right now, so we'll skip Neo. Domo still just chilling. Plus we have this YOLO call that it's going to expire worthless, but whatevs. SoFi, Jumia. Look at that. Jumia continued on up, so beautiful move on Jumia there. Canopy Growth Company. This is interesting. Someone mentioned this in a comment yesterday, I think, that they think it's a good entry, and I agree with them. That I'm looking at this entry here and saying this might be a good time to buy Canopy Growth right here. You can see that this this green line here is a VWAP anchored to the low of 2.76. There's a nice bounce here from $6 up to, we'll call it $10, and then a little sell-off before just a rocket. I think this was on some news or something like that, up to $15. That was a huge win there. And then we've got another catch potentially forming right here, and you can see it kind of forms this a similar 3-day pattern of just breaking below, holding, and then moving back up. So what I'll likely do is I'll wait to see if this moves back up tomorrow, and if it looks like it's moving up, then I'll maybe enter a position in Canopy Growth. And excuse me. Let's just take a look here. What are we sitting at right now? 7.7. So maybe like 6.5 if we're going on non VWAP supports and resistance. 6.5 would probably be my next area. So if this breaks, then maybe around 6.5 is where it stalls and then moves back up. Matches tracks here, even tracks further back here. And then if that breaks, probably back down to around $5 a share. So let's take a look. Let's just take a look at like the 6.5 puts. Let's see some cash secured puts. What that has on the table for us, about 30 days out. That's not bad. $50 on 6.5s. 7.5%. I might take that. I could also go 7s at $70. I mean, if I got filled here, that'd be great. I don't think I'd get filled at 60. I think I could get filled at 50. Pretty dang easy there. All right, I'm kind of liking that trade. I might release one of these AMC option contracts so I can get some more cash and throw that into Canopy Growth Company. And give myself a second to think through that. The thing that I really am not a big fan on is I'm actually not that bullish Canopy Growth Company and Aurora Cannabis as companies overall. I just don't think it's like investing in like an alcohol company, right? Like I think it's a net negative. Oh wow, Sam finally popped. Oh my gosh, look at that. I've been tracking this one too. They finally had a little pop back up 260. Wonder what happened there. So it's just an upgrade, I think. I don't know. Let's see. What day was this? 5/31. Oh, someone's in talks to buy them out. Ah, interesting. Interesting. And they popped pretty big on that news. Well, that's fascinating. Anyway, back to Canopy Growth Company. I'm not super bullish on the company overall, and because of that, I don't like I wouldn't be okay holding, like if I get cash secured puts at 6.5 and it craters down to 5, I wouldn't want to hold it until it comes back up. Like if that happened to me on Jumia, I'm fine. AMC, I'm fine. Domo, SoFi, totally cool with that. Canopy Growth Company, not so much. Let's take a look at Riot. I'm not sure we can get anything with Riot that I'd want either. In fact, the premiums have kind of cooled down a little bit, surprisingly. Huh. Okay, SoFi was the other one I was considering. The problem with SoFi is just their premiums are weak until they start running. Once they start running, their premiums juice. So this one would not, in my opinion, it'd be better to buy shares, sit on it, and wait for a run to sell calls into. We're sitting at a nice nice inflection point. The only thing I don't like is we've got this series of lower highs happening. Right, like that's a pretty clear trend right there. Lower high, lower high, lower high, lower high, lower high, lower high. But the highs, I mean, it is getting bought up. So this could be a very nice wedge squeeze. Like volume starts consolidating here. I could get behind AMC, or I mean SoFi here. Well, I'm probably gonna let it rest another day. Gosh, you know what? Maybe I just buy these back. I've already got 60% of the value in 2 days. Let's do it. I'm gonna take these off the table right now. So, official update on the challenge account. We're now up 1,108.95. That's probably going to drop a couple bucks when this expires worthless, because usually the way that these get valued on TD Ameritrade is at the mid, and so even though I couldn't sell this at the mid, it's assuming that I'd want to exercise, or that's, you know, it's assuming the value is there. So officially up 10% though, $1,100, up 10% in less than a month. That's exactly where we want to be, tracking about 10% a month, and I'm curious to see what's going to happen next on some of these positions. There's not a lot that's looking super good for me right now. Good to me right now. There's a lot that's looking good for me, just not good to me. I'm really surprised on the pop that these don't have more premium in them. Maybe 44 days out or something, especially because they still have earnings to report. Oh well. All right, so we've got $1,100 to spend. Let me just let's mind game. Where could we put this $1,100? We could go 5 and 7, AMC, SoFi, or AMC, CGC. Big lots would be 1, 2. We could go 5, 3. I kind of do like the big lots covered call. I know I said I wasn't going to play earnings on this. But if I do this, so if I buy 100 shares right now and I do this, my max risk is $300, right? The problem is if it falls on earnings, I mean, the rest of these premiums are going to be crap. That's the biggest problem. If it pops on earnings, no big deal. I just get exercised and move on. Or CGC's financials. I'm pretty sure they're not great. Let's see, CGC. Losing $500 million a year. Oh my, wait a second. What? There's no way that's correct. Hang on. Hang on. $250 million in sales. I love all these Temu ads. $250 million in sales and losing $500 million. Cash on hand $1.71 per share. That's not. I don't know about that. I'm gonna sit out on CGC. I like it from a technical perspective, but I just can't get behind sitting on shares if it keeps dropping. Not at these levels. Jumia premiums are probably still off the charts. The problem is pullback is quite imminent here. I'd be very surprised if there's not a pullback back to the the 5s or 6s. And so if I wanted to do a cash secured put down here, I'm getting, I'd get like 4%. It's not what I want to get right now. I mean, let's just let's just be real here. The premium's living in AMC right now. What was I in? I was in these 4s. Maybe I just move it up to 5s. All right, I'm gonna move half the account into this. So if I do this, what's that give me? It gives me a true cost of 4.5. Right. It's held pretty steady above 4.5. It's got a week till expiration. I mean, is there anything else out there that's sitting between $5 and $10 a share, right? $5. I guess technically I could go probably up to something at $12 if I wanted to sell. I could sell a cash secured put on it, right? Or maybe we could go up to even 13. So we'll go $13 per share. No OTCs. There has to be decent option volume on it because I want it to have liquid options. And there we go. No matching symbols. Oh, whoops, that's the ask. This needs to go to volume. There we go. Alrighty. American Airlines. AMC, Beyond Meat, Bumble. Nah, I don't like Bumble. Ford. Maybe Ford would be an interesting one to look at. They usually don't have good premium, though. FSLY. Weren't they like over $100 a share? And then like, yeah, oh no, 20. Oh yeah, look at that, 130. My goodness. How the mighty have fallen. Huh. Interesting. JetBlue. Oh, MindMed. Kodak. You think Kodak's going to turn into a pharmaceutical company again? Let's see what those last ones are. It's not showing me. Okay. Wait a second. Vale? I thought Vale was a mining company that got up to like $20. They were last I checked them. Yeah, they were up at like 20. They were back down at 11. What does that make their dividend? Are they still paying? Wow, look at that dividend yield of 11%. This is I think this is Brazilian. Yeah, Brazilian molten metals and mining. Vale dividend history. Let's take a look. I mean, I'm not quite sure how they're calculating this. I mean, in the so if this is accurate, 2023, they only paid a single dividend of 15 cents. First quarter of 2024 paid a dividend of 55 cents. So maybe they're assuming that this is going to be the dividend all year. That'd be $2. No, because it's trading so low. Their dividends were nice, if a bit sporadic. 2021 they had 3 dividends. So they've got kind of this sporadic dividend going on. I could see some cash secured puts here doing well. Let's see if there's any premium on that. Nope. Alright, that's out. Teladoc. Man, Teladoc. I don't really like their business model either. This does not surprise me in the least. This does not surprise me at all. Rivian. Redfin. Children's Place. That's right. They were kind of popping recently. Let's look at Place. They had a recent rally. Yeah, $6 up to like 15. Sold off now, sitting a little VWAP bounce. They're probably gonna have some good premium. Let's see. Yeah, that's some juicy premium right there. Okay, let me think about this one. We could go these put 10s. Get $100 there, more than $100, so 10% easy. But what's the likelihood that this falls below 10? So here's our price line here at 10. And honestly, it doesn't look like there's any kind of support or resistance that can be found over here. Okay, here we go. Look at that. So their deepest sell-off back in whatever this time period was, 2020. So is this COVID? Yeah. Brought them all the way down to about $8 a share before moving up. And then back down here. We've got an all-time low of $4. $8 seems to be $8 to $9 seems to be their long-term. Yeah, I could see that working out. Let's take a look at their financials. Let's see. Oh, whoops, earnings. Here we go. I forget how bad this is. I thought that was going to be better than that. All right, let's go back to FinViz. Why all the hate on Children's Place? $1.5 billion in sales, negative income, negative books per share. So maybe they just have a lot of debt. Cash per share $1. Oh my gosh, 61% short? What the heck? Can that be correct? Short interest report dates. Alright, let's see when the next short interest reporting is, or when the last one was. Okay, so this was just updated then. Although, wait, hang on. So settlement date, due date, publication date, June 11th. Okay, so May 24th was the last publication date. That's still pretty close. I mean, this is not likely to have changed much. So let's just go. Let's go Children's Place Investor Relations. Q4 2023. $2024 proxy statement. I don't think anything in here is relevant. Let's take a look at insider trading real quick. Huh. Look at that. Buy, buy, buy. Those are some big buy. I like it. Oh my gosh. All right. Children's Place. Yeah, I just want to see, why are you guys losing money? this makes sense to me, right? Like, normally you don't want to see decrease in sales, but 2019 is going to be an anomaly in a lot of companies' books, where because of the massive influx of online shoppers, yeah. So that doesn't really concern me. This concerns me though. Adjusted earnings per share, negative 7.38. Why are they burning money? I don't know, man. This is interesting. Like, kids gotta have clothes. Paid dividends for a little bit when things were looking rosy. Just had a big old dip here. What's most interesting to me is that the directors are buying, or this 10% owner, whoever this is, Mithrak Capital SPC. Look at these buys. Almost 2 million shares, million and a half, another million. So they just bought, 2.5, 3.5, 4.3 million shares here, massively increasing their stake. And then the president and CEO also. These were a year ago now. He recently bought a bunch. So who is this? What else do they hold? Based out of Almagrera. Weird. Well, I'm gonna go for it. I think, especially since we've been talking, there's been this even nicer dip here. So we've got a nice dippity going on. We're coming up on this volume weighted catch. So I'm gonna go for it. I think if I get exercised on these cash secured puts, I'm okay with that. I'm really okay with that, actually. So now the question is just what contracts do I want to enter? I could go here for probably 120 bucks, so 12% or 10% or so, for a month. I could go 9 days, and I could get probably 6.5%. These 9.5s actually are really interesting. So they're priced very similarly to the 10s. It gives me a nice 5% gain in a week. Lets me position myself really well where I can readjust this if needed. Let's look a couple weeks out. 9.5s are about the same. Those 10s are also looking real tempting. And I can always roll these forward too if I need to. All right, I'm gonna take this. I'm gonna take the 10s, and I'm gonna sell. I'm gonna see if I can get filled at. I want to get filled at 125, and if I can, wonderful. If not, then I might readjust and go for the 9s or something like that. And that is not filling. Oh, there it goes, just filled. Beautiful. Okay, so there's our new position. We're in for $1.25 on the put 10s. Sold to put 10 for $1.25, which brings my, if I get exercised on this, my average is 8.8. That's a beautiful average, I think. So good position. I'm liking it. I have $233 in dry powder that I could spend elsewhere, but probably not going to. I don't think there's anything at $2-3 or $2 a share that's worth going after. So we're going to sit in this play for a little bit and see how it goes. Hey, thanks for tuning in, everybody. Drop a subscribe if you haven't already. We'll catch you next time.